Welcome to our channel, Stock Market Analyst. Today, we're diving into the basics of stock splits and reverse stock splits. By the end of this video, you'll have a clear understanding of what these terms mean, how they work, and why companies use them. Don't forget to like, subscribe, and hit the bell icon for more investing tips. What is a stock split? Let's start with stock splits. A stock split is a corporate action where a company increases the number of its outstanding shares by issuing more shares to its existing shareholders. The total value of the shares remains the same, but the price per share is reduced. Think of it like cutting a pizza into more slices. You still have the same amount of pizza, but now there are more slices. How does a stock split work? Here's how a stock split works. Suppose a company has 1 million shares outstanding, and each share is priced at $100. If the company announces a 2-for-1 stock split, it will double the number of shares to 2 million, and the price per share will be halved to $50. So, if you owned 100 shares before the split, you would now own 200 shares, but the total value of your investment remains the same. Why do companies split their stock? Companies split their stock for several reasons. 1. Increase liquidity. Lowering the share price makes the stock more affordable for individual investors, which can increase trading volume and liquidity. 2. Attract new investors. A lower share price can attract new investors who may have been hesitant to buy the stock at a higher price. 3. Positive signal. A stock split can be seen as a positive signal that the company is confident in its future growth prospects. What is a reverse stock split? Now, let's talk about reverse stock splits. A reverse stock split is the opposite of a stock split. It's a corporate action where a company reduces the number of its outstanding shares by consolidating them. The total value of the shares remains the same, but the price per share is increased. Think of it like combining smaller slices of pizza into larger slices. You still have the same amount of pizza, but now there are fewer, larger slices. How does a reverse stock split work? Here's how a reverse stock split works. Suppose a company has 10 million shares outstanding, and each share is priced at $1. If the company announces a 1-for-10 reverse stock split, it will reduce the number of shares to 1 million, and the price per share will be increased to $10. So, if you owned 1,000 shares before the reverse split, you would now own 100 shares, but the total value of your investment remains the same. Why do companies perform reverse stock splits? Companies perform reverse stock splits for several reasons. 1. Avoid delisting. If a company's stock price falls below the minimum required by a stock exchange, a reverse stock split can help raise the price and avoid delisting. 2. Improve perception. A higher share price can improve the perception of the company's stock, making it more attractive to institutional investors. 3. Reduce volatility. A higher share price can reduce the volatility of the stock, making it less susceptible to large price swings. Practical example. Let's look at a practical example. Here's a comparison of two companies. Apple, which has performed multiple stock splits. Apple's stock splits have made its shares more affordable and increased liquidity. Citigroup, which has performed a reverse stock split. While Citigroup's reverse stock split helped raise its share price and improve perception. To sum up, stock splits and reverse stock splits are corporate actions that adjust the number of outstanding shares and the price per share without changing the total value of the shares. Stock splits increase the number of shares and lower the price, while reverse stock splits reduce the number of shares and raise the price. Understanding these actions can help you make more informed investment decisions. That's a wrap on our guide to stock splits and reverse stock splits. If you found this video helpful, please give it a thumbs up, subscribe to our channel, and share it with your friends. Have any questions or topics you'd like us to cover? Drop them in the comments below. Happy investing!